YouTube, what's going on? Welcome back to another inter-equity trading video. Today is going to be a trade breakdown. You definitely want to watch this one. I went super in depth breaking down my whole trade from A to Z. That made me over $3,500 in a single morning of trading. Also guys, we have a big announcement. Our official Blueprint Bootcamp application process is now live. Check the links down below in the descriptions. Apply, maybe you'll get accepted. Unfortunately, we cannot take everybody on. There's gonna be a whole process you guys have to go through. If you guys enjoyed this kind of video, if you wanna see more trade breakdowns, like, comment, and subscribe. Turn those noties on. We got lots more content on the way. All right, guys, so here in front of us, we are currently on the gold chart, XAU USD. As per usual, we'll start from the higher time frames and work our way down. So if you guys are quite familiar of the conditions we are in right now, but gold has been going up for quite a while. Bullish for a couple months now. Nearing, we're currently in the middle of October. This trade was taken October 10th, which we'll be breaking down in a moment here. But again, I want to start in the higher time frames and we can analyze and follow that current narrative. So what can we see here on the hourly chart? Price left these equal highs and then had this sell off to the downside. Analyze this sell off. Look at the speed on this sell off. Okay, not much pullbacks other than the high. We had a sell off from the high, little slow down, and then a big continuation down. We're talking, this is over 1,000 pips, 1,100 pips to the downside. Okay, taking out lows from the left, which induces sellers into the market. We found some sort of bottom here, sweeping some lows out from the left. This is basically all I see on the hourly right now. Obviously, this bit of price action is chunked up. It's quite close together. So simply what I do, and this will answer a lot of your guys' questions that I get on what time frame should I use for this? What time frame should I use for that? Listen up carefully. And this is quite simple. 1 hour chart looks kind of bunched up here, right? We can all agree on that. So simply we'll go down to the 15-minute and look at this. Now it's opened up. So it makes more sense. We can start seeing some highs and lows that we couldn't see on the hourly chart. And that's it. That's all I do. You see that? Big sell off to the downside. Why was this important? Analyze this move. This bullish move that pushed up. Look, every single time we took out a high, we were building liquidity at the lows. Again, took out a high, building liquidity at the lows. And then finally, we end up taking some internal high out here and big dump to the downside. We've induced buyers by taking out highs, then finally trapping them all and taking out some lows from the left as well. I am leaning on price back to the upside. Okay, but I need to see some sort of price action deliver me an entry. So what can we see on the 15-minute chart? We found some sort of bottom. We went bullish. Okay, then we sold off to the downside, clearing some internal lows. All right, that's fine. I don't see anything relevant to as of yet. This is in London on the 10th. We clear out internal lows. We get a move to the upside, a pullback, retest that extreme, and we go long. Now we're entering the session I usually trade, which is New York. Okay, obviously I'm asleep through London. I usually hop on the chart before New York Open. So New York Open being 8 a.m. my time, I'm usually on 7:30, 7:15 to do a little pre-market analysis. I've rewinded time to 9 a.m. and I'm going to emulate live time as much as possible, show you guys my mindset, what I wanted to see, why I was targeting specific highs, why I wanted to buy, and we're gonna walk through it candle by candle on the lower time frames. All right, so bear with me here. We're on the 15-minute chart. We have taken out a high from the left-hand side, which is fine. We've grabbed some sort of liquidity up here. We've had this pullback to the downside. Take in and realize that we've just been trading within this whole imbalance to left-hand side. That's it. Imagine the amount of sellers that view this big sell-off as a momentum move to the downside, entering positions here, entering more sells in here, thinking this fair value gap, this imbalance, whatever you want to call it, is going to push price to the downside. No. We don't view the market that way. Okay, so I'm going to clear this. Again, we understand sellers are entering positions here, entering positions over here, and pushing price lower. Look how price grabs this internal. And again, look at the 15-minute, very bunched up, right? Really close together. Look at these candles, very squeezed. So we're going to open it up at the 5-minute chart here. And even the 5-minute, I think we can all agree, again, very bunched up, very squeezed. So we get on to the 1-minute. That's it. You see how simple things can be? Finally, after taking that high from the left-hand side, we marked out. Again, we get that sell off to the downside. We take some lows to the left. But we've grabbed this liquidity, yes, but we have yet to trap buyers. What do I mean by that? All we've done is trended to the downside. We haven't seen any false moves up to induce buyers, and then we would view this as a trap, right? We haven't seen none of that yet. So we need to wait for some sort of trap to occur. So watch this. We get that move to the upside, taking out highs on the left-hand side. Now, again, understand that this is now a move higher to induce early buyers. This is going to be known as what we call a trap. Any reactions in these areas, and we can mark them out to make it as easy as possible for you guys. Any reactions in these areas will be deemed false in a trap. Okay, as simple as that. We want to see price below these lows now, because once these lows get taken out, we understand buyers have been trapped. We're going to have liquidity target to the upside. And don't forget, we've been trading within this massive imbalance to the left-hand side. So anyone entering positions here at this high, and also here at this high, where stop loss is going to be? They're going to be covering that high from the left-hand side. Look, just like this. So let's say sellers are in positions here. They want price to the downside. They're entering like this. Stop loss is going to be, and I'm going to put a blue line here, right there, 4021.69. That can be also a future target for us. One target being here, which is the structural high, and then the high from the left-hand side, where we understand that liquidity can be there. Okay, so we target this high, and then we target that high. Simple, very, very simple. However, now we're still waiting for that entry. How can we get involved? So again, since we have taken out these highs, what do we know that as? Buyers are induced in the market, right? Very simple. We now need to see, again, price below the lows. And what do we see below the lows here? Look at this squeezed up price action right here, that price reacted off of, again, liquidity. If buyers, early buyers enter positions in here, where's their liquidity going to be? Below this low. Very simple. Because they enter here, watch this, stop loss below. So there's going to be liquidity below 3977.81. And what do we have right below? Let's analyze this price action. You guys know I take entries from what I call liquidity blocks. So this price action here, yes, it's a little bit squeezed up because this is M1, so it might be hard to see. However, it is the same thing on every single time frame. I would go down the seconds to make it a little more clear. However, it's not necessary for me. I don't use it. But this price action right here is literally just this. Okay, so price takes out a high. I'm gonna follow along with the actual candles. Price takes out a high, price takes out a high, and then that's where buyer's liquidity is gonna be. This is where buyer liquidity is gonna be, and price comes down and runs it. Look, we run that low, creating a liquidity block for me. When price moves away, like it does here, I'm gonna move this a little bit. When price takes out this low, creates the LB, moves away, we now have a possible area we can take an entry off of in the future. So it moves away, creates the LB, a possible area we can enter off of in the future. Of course, paired with liquidity. And what have we done this whole time? We have paired it with liquidity. So anywhere in here, we can use as an entry. All right, and I can mark this out. Perfect, we have a liquidity block down there. Look on the M5, you can probably even see it a little bit clear. Boom, just like that. All right, so what we can do is we can drag this across. And this can be used, again, as an entry area. Understanding, remember, this is the important part here. When we trade lower and we take these lows out, buyers are now trapped. That's our signal to buy this thing back up. What we're gonna do is we'll set a limit. You can either set the limit as soon as the liquidity is taken. I actually took the entry when we took the liquidity, yes, and we tapped into the area. My stop loss, of course, always below the area. I don't want to see stop losses, guys. And I know I get screenshots where you guys send me things like your stop loss is in the middle of nowhere. No, we don't do that. We need to see the stop loss below the low from the left, always. Targets, structural point up here, very easy. Look at that. Highs, done. And then, of course, we have that high from the left-hand side. We can leave a run or two, or we can partial here and then close out full here. So you have a couple different options depending on your kind of appetite of how long you like to hold trades. You have to make that decision. Okay, everybody's different at the end of the day. We get that move up again. That's induced buyers. Price comes down. And look how we even stall here. Understand that this is all done on purpose. Buyers want to enter here. So typically what happens is it'll slow down. It'll induce them to take positions. All that's doing is it's building liquidity below this black line we have here, this low, and also that blue line from the left. Next candle comes in and look at that. We get tagged in. As simple as that. Boom, spike down, grabs that liquidity, traps the buyers. That's the important part here, guys. We trap those early buyers. That's, again, that's our signal to buy this thing back up. Okay, so we get entered in our position. We have, look at these equal highs, price even left up here for us to, it's an added confluence, right? Look at this, seller liquidity left in the market here, okay? So again, if you're not comfortable to hold to the full target, that's fine. You have a partial point here as well. Right, what we can do to make this as easy as possible for you guys is we'll make all of the possible targets blue lines. All right, so one here, and then one up here. Okay, so we'll leave it on the last one. Again, partial, full target, done, in and out. All right, let's play this out for you guys. So it actually comes all the way to the extreme, and that's fine. Look at our stop loss here. It has to stay below the low. All right. For those that get greedy with their stop losses and maybe tuck it somewhere in the middle, I don't know where you guys are tucking it sometimes, you're going to get stopped here. because you failed to understand you need that stop loss below the low. Okay, so just like that, simple as that. We get entered in a decent reaction up. A little bit of a slowdown as to be expected. Why? Since we have taken out these lows on this big sell-off, this is going to be an area sellers want to take this thing lower. Okay, so we'll mark this out. The red area is going to be a trap. Okay, look how price stalled. I'm going to zoom in here for a moment. For 35 minutes, we were inducing sellers in this area. Finally, we start getting that volume up after enough liquidity has been injected into the market, all right? Induced into the market. And then we start getting that clean closures to the upside. Look at that. In one candle, partial, and now we're on our way to our final target. A little bit of a pullback after taking out the high, another pullback, and that's it. Look at that. 3 targets done from entry to target, full target. You're looking at about just under 90 minutes. So just under an hour and a half, and full target was about a 1 to 7. First partial, we're looking at about a 1 to 3.5-ish, almost 1 to 4. Second partial, almost a 1 to 5. And again, that final 1 to 7. All right. Gorgeous, gorgeous piece of price action in front of us here. So please, 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 guys, study this, study the direction, study the entry, study the whole narrative that I follow along with you guys, okay? And please rewatch these videos if you guys need, all right? All right, guys, I hope you enjoyed today's video. It was a good one. I'm gonna be doing more of these trade breakdowns because I feel like it puts all the concepts into one and you guys can see everything put together again from A to Z, from direction all the way down to entry and then finally targets. Again, if you guys want to apply for our new Blueprint Bootcamp, the links will be in the description below. It's gonna be a whole application process, but it is live right now. So take advantage. They're not gonna be open forever and we have limited spots available. Leave a comment down below also if what kind of videos you guys want to see from us going forward. All the best, guys. Take care.